Welcome to the Seattle Investors Club podcast with Julie Clark and Joe Bauer, where we share the nuts and bolts of real estate investing from our 20-plus years in the industry. Sit back, relax, listen, and immediately take action. Are you ready? Here we go.
Welcome to the Nuts and Bolts of Real Estate Investing podcast. My name is Joe Bauer, and I'm here with my co-host, Julie Clark. Julie, how are you doing today?
All good, Joe. Back in the good old US of A after spending almost a week in Canada up at Whistler. Totally awesome. Just it's so beautiful up there. It is insane. You know, I was just thinking yesterday, we're at the top of like Seventh Heaven or at the Blackcomb Glacier, and just extraordinary, just beauty up there, right?
So cool.
I know it. I know you live that life every day. So, you know, life's rough, but yeah, it was a good time. Addison yesterday made it to the top of the Blackcomb Glacier, which, you know, if you've ever been up there, that rope tow that you have to use, the first time the kids use that is a little interesting. So a couple wipeouts, and then she made it up, and then they just ripped down. It's not like the Blackcomb Glacier is actually that difficult. It's just a little intimidating at the top, and can be fun and interesting the first time riding that rope tow. But
yep.
You know, it's just such a beautiful adventure up there. So I'm so glad that she was able to pull that off. And we just had a blast. So where are you at these days?
I'm in Frisco again. We've been hanging out at Copper, and just so you know, I've fallen off that rope tow before. So I get it. Oh yeah, I have.
I don't know how I've been lucky, knock on wood. I'm going to knock on wood, but I have made it up there without issue. But I feel it. I feel it for you. Actually, one of our little girls, we have 3 11-year-old little girls, tried like 4 times, major wipeouts, had to hike up the entire thing.
Oh.
Yeah. So we had some tears that day, but it was all good. So, but we have no tears here in the Seattle local economy, which I think we're about to find out today. No tears for us here in Seattle or the Pacific Northwest. Today we're going to check back in with our real estate analyst, Todd Britsch, who we have on the podcast a couple times a year to give us the update on what he's up to, as well as what's going on and what we can expect, you know, in our local economy here and beyond, to help us make good informed decisions as we can't crank through our real estate business. Welcome, Todd.
Thank you much. Happy to be here.
Yeah. Well, you've got some news for us. Let's kick that off first. Todd is now at Level Capital, which was formerly Cyan Funding. And we're going to let him give us an update and teach us a little about what he's up to these days before we jump into our economy update.
Yeah, it's a little interesting switch there. I had been with New Home Trends and obviously for 13, 14 years, sold it off to Metro Steady, was there for 5 years, and have now moved on. But the best part is I still get to do a lot of the same stuff I was doing before. I am over at Level Capital. I'm the Senior Vice President, Director of Market Research and Asset Risk Management. And I still get to study the market and the economy. And then,
what's the primary business of Level Capital? What's your goals over there, and what are you guys up to? Some private lending and?
Yes, we are a private vertical funding company for the most part. We do some lateral in regards to A&D, but very little, to be honest with you. We work with the small to mid-sized builders in Washington. We're expanding into Oregon. We'll be in Arizona soon, Utah, Idaho. And that's just kind of the beginning of the expansion aspects of things. And
what makes you guys decide which markets to launch into next? Is that just economic decisions, or is it easy to get a license type decisions, or relationships, or what?
Yeah, it's all of above for the most part. The licensing issue is kind of what keeps us out of markets. So the only market on the West Coast really that could use our service that we're not going to go into is Las Vegas, just because Nevada is brutal to work with in regards from a licensing aspect, from my understanding.
Right. We hear that. That's a common thing we hear as well from our other lending friends. Yeah.
So, but the rest of the West Coast and the key markets will be joining here real shortly.
Good stuff. And so what types of builders, what size projects and that sort of thing are you guys looking for? You say mid-sized builders, which I think we discussed was 150 or less units per year, but maybe not. Basically come at you with whatever.
I think that's our primary target market is going to be that 1 to 150. But the reality there is as well, we're in conversations right now with some of the larger private builders because we're going to be so competitive on our rates and terms.
And so what does a loan look like with you guys? So somebody has a deal and they, is it what required type of downs or equity would you guys require?
30% LTVs. We'll do 80% construction. And then in regards to the duration of the loans, the typical terms are we have a lot of our loans going out now at 8%. Some of them, depending upon the risk of the loan, will be at around 9 to 9.5. We really don't see anything higher than that. But our goal is to keep everybody at 8 and possibly below 8 moving forward. So we're putting together a program that will allow us to do that. And the biggest thing that we run into as well, and this was one of the key components that brought me over here. Hard money typically has to turn twice a year to get your rates of return. And what ends up happening is hard money will charge points on their extensions, and that extension may only last 60 days, and then your rate jumps up. Our terms on our loans are typically 9 months, sometimes 12. And then our extension fees are half point to a point for anywhere from 30 days to 6 months. So we work for a group of investors and owners that do not want to take advantage of the builders, don't want to take advantage of the market. The goal is to have that repeat business and add value to the building community. When I first got interviewed with these guys, and it just started out as a conversation over lunch, before I knew anything about what they were doing, I basically said at the beginning of the lunch, guys, I don't see a fit here because I've spent 20 years of my career taking care of the market and taking care of my builders and my bankers and the industry in general. And walked away from that meeting just talking about business philosophy and family and everything else under the sun. Ended up getting a phone call back or a conversation later on and from one of the principal owners, Keith Dibbles. He says, I love what you had to say about taking care of the market and taking care of the builders. Come over here and take care of hundreds, if not thousands of builders over your career versus taking care of just the, say, 20, 30 largest in the Pacific Northwest. And ultimately, if you take care of them, you take care of us. So it was intriguing. I made the switch and loving it so far.
Well, that's fantastic. I mean, it sounds like a perfect evolution of what you've been doing, and you get to combine and blend as well as take on some new challenges. And we can't wait to see what you do here. I'd love to see, any type of term sheets or anything you can send us, maybe send to Joe after the fact. We'll make sure. What's the website or how do people engage with Level Capital? Is there a levelcapital.com?
And you more than happy to share my information out there. My email is todd.britsch@levelcapital.com. So it's todd.britsch@levelcapital.com.
Perfect. So all you builders out there listening, give Todd a call, connect with Todd, see what he can offer you. And we'd love to hear your feedback if you do so. We want to hear great success out of Todd with his new adventure here with Level Capital. Fantastic. And maybe there's a niche, we can put you in with us here, Todd. Let's do some more talking offline, and we love filling holes. We try to plug all the holes in our own, I'll say, world of helping all the investors and builders and, every lenders and everybody out there. We like to sit here and just share as much information and give as much value as we possibly can with people that actually, are focused on helping people, not taking advantage of people. That's what we like to align ourselves here with at Seattle Investors Club. So looking forward to learn more about Level Capital and getting the feedback. You guys give Todd a call, reach out with your projects, and we'll check back in maybe in another 6 months and hopefully bring you some awesome case studies and so forth. So thanks, Todd, for sharing that, and good luck to you going forward. I know you don't need it. I know you'll crush it. So with that, what we rely on with Todd over these last few years is just a local update on our economy so we can all make good decisions here, whether we're buying, selling, building, renting, or improving our properties. Obviously, if you're building, Todd can help you with that more and beyond this podcast today. So, Todd, let's just jump into it here on the economy. And I'll just kick it off by saying we're not going to do our normal tell you your life story because we've done other podcasts with you in the past. Joe will link them down below. That'd be kind of fun to listen to the old ones and then the new one. But one of those had your life story in there, so we'll make people go back and listen to that one. But as we are sitting here today, first question for you is, when you think about our local economy, what would you say, the top impactful news or event that has already happened, that's already in place or already occurred or already been voted into place that impacts our local housing market at this time? Something that's already happened.
Well, you can look at the 4.5 million square feet of office space opening up starting in 2022 for Amazon. The announcement of an additional 15,000 employees getting hired here in the Puget Sound. Facebook's, I believe it's 2.5 million square feet in Bellevue as well. So, there's going to be a tremendous amount of job growth coming in there. Again, starting in about 2022, 23, when that office space begins to become occupied.
Do you think that that's going to impact people living in Seattle, since I think those jobs are over on the east side, right? Will that impact Seattle homes?
Yes and no. Just because it has a tendency to bring with it additional job growth. Because as we in the Puget Sound begin to hire and accumulate an enormous amount of intellectual wealth with the employees that are being brought here within the tech industry, they ultimately end up at some point either breaking off from Amazon or breaking off from Facebook, starting their own consulting firms within Seattle. They end up staying here oftentimes. And we're seeing a lot of those startups becoming successful throughout the region and continue to hire. It's not just those two. Those are just kind of the biggest tech moguls out there that are bringing in the job growth right now.
Right. So, biggest news out there is just our continued booming job growth in our area here that, I'm sure we can't keep up with in regards to housing. It means that prices will continue to rise, I imagine. And, how about shortage in supplies? How with this new news coming and the massive amounts, like you just said, of job growth here, where are we looking at today in regards to being able to house all these people?
The shortage continues, and it's pretty rampant throughout. When I look at the resale market, we are back down to around a month's supply again in most of the areas. There's actually, let's see, I remember I had King, Snohomish, and Pierce County all at essentially 1 month supply. Thurston County, as we start moving into the south corridor, they're below a full month supply. I think they were like 0.8. So,
and where are those people? What's up with those people in Thurston County? What's causing that out there? Just people are moving out because it's more affordable, or What's the story down in Thurston?
Well, we've got a couple of things that are happening. There's been an issue over the last 10 years with a Mazama gopher, and it has restricted new construction building. Builders and developers are actually a little bit nervous to even go down into that neck of the woods. So we're not having the new construction coming in and filling in the need for the in-migration that we're seeing.
And for what was that reason?
It's called a Mazama gopher. It's an endangered species. It's not, to the best of my knowledge, is not native here in Washington State, but somehow it got here and it started occupying some space in Thurston County. And because there were a couple that just randomly showed up, by the way, there are rodents everywhere else in the country.
And what do they do? Eat wood or dig?
No, it's just a gopher, an in-ground gopher. I'm sure it just eats grubs and worms and everything else that gophers eat. But because there were so few, they're endangered now. And if you have, let's hypothetically say you plat out a 200-lot subdivision and you're 90% of the way through construction and that Mazama gopher shows up, you're done.
So it's an endangered species thing.
Yeah.
Oh, geez.
It's really not endangered. There's just a few of them that live here that they're not, like I said, they're not indigenous, to the best of my knowledge, to Washington State.
Wow, that is weirdly, of all the things we were going to talk about today, I sure as shit did not think we were going to talk about a gopher.
Yeah, well, it's kind of an old lingering story out there, but what it's done is the builders and developers are real nervous about coming down into Thurston County. There's a map online that shows you where here's the biggest kicker. It's the gopher-like soil. So even if you don't have a Mazama gopher, but you have soil that's conducive to the Mazama gopher, you still have to jump through so many hoops. And
wow.
I do believe that there's also huge impact fees that are associated per lot to end up to develop.
So crazy. So where's that pushing people then? Where are they ending up, the builders who would otherwise be building in Thurston? Where are they got to build, so where are they going?
Well, it's mostly the nationals that have pulled out of Thurston for the most part. I haven't taken a real deep look to see which nationals are down in Thurston recently, but we're just not seeing a lot of vertical development, nor are we seeing new plat applications coming into Thurston County.
Interesting. It seems like there's something to be thought about in regards to all that, but we'll get past that for now. We can talk about gophers for a long time. So where do you see right now we know we have the job growth up here in the Seattle area, Bellevue area. As far as the, fastest growing, counties, which would be if you're a builder, where would be a good spot these days to go focus on? I mean, I know you got all the aside from the infill, is there anything outside of the urban infill areas that is fast growing and hot for local builders?
It's kind of widespread right now. So when I look at where the sales velocities are increasing year over year pretty substantially, it's King and Snohomish County. Those two are driving the new construction housing market. For both new construction, attached and detached combined. I think King County was up 72% for the fourth quarter over the fourth quarter of 2018. And Snohomish County was up 93% over the fourth quarter of 2018. Now, you have to remember also is, we had talked, I think the first time we talked about the recession coming, slightly and the housing market turning in 2018, and then it ended up happening in June, progressed all the way through the rest of the year, and then 2019 started off in King County, again, being kind of the hottest market, and then as King County heated up, it kind of trickled out from there. Do you guys remember when the last time it was we spoke? Was it 6 months ago or?
I think it was podcast number 72, Joe. I don't know how long ago. This is like 100 and something. So I don't know, 30 divided by,
It was on 4/25/19.
Okay. So I would venture to say that I mentioned in that podcast that first quarter was good. Second quarter is going to be better. Third and fourth quarter are going to be absolutely on fire.
2019, right? Yeah.
Yeah. In regards to basically new construction, and we had already begun to see the resale market turned around a little bit, and it was going to behave in the same fashion. So, and we ran into just that. The second quarter of 2019, new construction single family housing was up 19%. And then the third quarter, it was up 32%. And then the fourth quarter, it was up 44%. Now, again, primarily driven by King and Snohomish County. And Pierce County is just now finally starting to catch up and pick up and absorb some of that overflow from the two northern counties.
Right. And so, I mean, when we're talking about how many new homes are available. Is that what you're talking about in these stats?
Sales velocity, new construction sales velocities.
Yes. Right.
Up at that pace.
And how about the pricing of those? Are I know there was some time where townhouses were sitting, townhomes, I think, maybe I'm wrong, but I believe they were just sitting kind of flat for a while. Is that still happening, or are the sales of townhomes picked up?
The sales of townhomes for King County, again, it's very broken up throughout, even just in King County alone. So King County, I want to say it was up around 80-90% over last year. Now it's up in every submarket, especially in some of the outlying smaller cities within King County. So if you look at just Seattle proper, it's broken up for me into 4 submarkets. I've got West Seattle, South Seattle, Central, and North. South Seattle is up 100%. Now, granted, it only went from like 12 to 24 sales, and 20 of those 24 sales in the fourth quarter of this year actually came out of one project. There's still a bunch of inventory down in, say, the Rainier Valley and ML King that's overpriced slightly on new construction, and this is the consumers telling me this. It's not me telling the consumers, because I can look at the absorption rates and see what's happening. West Seattle has picked up again. It's up roughly 30 to 40% over last year. North Seattle, which is Ship Canal all the way up to Shoreline, is doing phenomenal. We're seeing price appreciation again, and inventory that can't stay on the market. Central Seattle, however, is the big issue. Central Seattle is down 6% over the fourth quarter of last year.
Why would that be, you think?
That is because the Seattle City Council is 100% at fault. They have not addressed the drug issue on the streets, the feces on the streets, the crime. Seattle is still a mess, and people are leaving Seattle because they don't feel safe.
Understood. So if you're a builder today, and would you want to build, what product is probably, I don't know, if I'm not a builder myself, so I'm asking some Dumbo questions here, but if you're a builder today, I mean, I live in the Ballard area where they're buying up, and I myself am trying to sell as a broker, where you're keeping the front house and building the townhomes in the back, that type of thing. Do you want to be like the 4-pack or the 8-pack, 6-pack of townhomes guy or gal today? Do you want to be I think it's to be seen who's going to buy these townhomes in the back of residential houses. I think it's weird. I imagine they'd have to be priced right, or it seems a little odd to me. Do you want to be the 4 or 6-pack or 8-pack townhome builder, what I'll call the backyard townhome builder, or do you want to be the single family detached builder today? Which of those? Feels like to me the single family detached builder is going to crush it, but I don't know.
Yeah, for me, I'd have to come at it from all angles. I'd have to be a builder, because you can't, if you put all your eggs in one basket in regards to, I'm just going to be that infill, build the ADU unit behind a house, kind of minimize and sell it, right? Reality there is it's almost virtually impossible to track all that inventory that's coming online. And it's very possible that we actually get inundated with that ADU inventory over the next 2 years, and you're not able to sell them.
Right.
I'm looking at where a lot of that inventory is going to come online, and it's in that central core of Seattle. And it's becoming, unfortunately, and it's sad for me, it's an undesirable place to live. For many, not for all, but for many folks to come in and live in that central core of Seattle. Because
do you think that price point will force people to buy those? It feels to me like those, detached units behind a house or whatever are going to have to be a lower price point, and that lower price point gets them out of a condo and gets them out of a traditional 4-pack townhome situation and puts them in something that's a hybrid between a house and a townhome because of the smaller size. There's just maybe 2 of them or 3 of them behind a house. It's less, and they fill that price point of $750 that people can afford. You know what I mean? It's like an affordability pocket. So yeah, they're yucky, but people will buy them because they want to live urban infill, but they can't afford, something else. I don't know.
Yeah, there lies my even just one of my issues is the demand. There hasn't been a demand study on the exact amount of demand for that urban infill. And the behavior of the Seattle City Council and the pandering to the drug addicts instead of the homeowners could have a huge negative impact on that future demand for that type of housing. So while I think it's an absolute need in regards to changing how we've zoned land and created product to fill a need, we have now done it in an area where we're seeing demand dwindle in that in that central core of Seattle. Now,
so I guess what we're saying is tread cautiously. If you are, it feels like in our own world here, in our own group of Seattle Investors Club and our Pacific Northwest friends with all our local real estate investment clubs, that people are very, very focused on this, ADU, DADU type of thing. They're, cottages and all that type of stuff, and that they're, maybe sort of loading up on that because it's not everybody has figured it out yet. But you probably, like you said, you don't want to put all your eggs in one basket, right? You wouldn't want to have all your eggs in that basket in case that basket stinks a little bit, right?
Yeah,
exactly. Hey guys, it's Julie here with a quick break from the show to discuss an opportunity some of you may have interest in, which is to work more closely with me. On almost a daily basis, I get calls from investors and brokers, both new and experienced, asking me for guidance or advice. I love helping you guys out, and it keeps me on my toes too. So with that said, I wanted to let you know that I have a private broker coaching community called the VIP Education Community. And the best part is that it's 100% free. That's right, it's free to join. So whether you're a traditional broker or a broker investor, my VIP education community offers personalized one-on-one coaching from not just me, but also from my experienced broker friends with expertise in all disciplines of real estate and real estate investing. We'll teach and share our modern marketing strategies, our tech and lead generation resources, plus teach you how to identify or offer up opportunities for yourself or for your clients using techniques such as seller financing, lease options, land entitlement deals, BRRRR investing, flipping, multifamily or commercial coaching, whatever you like. We've got it all covered for you. The future of real estate is changing fast, and to stay in the game, it's time to learn about all the options you can offer your buyer and seller clients, as well as, if you want, learn how to use those skills to grow your own real estate portfolio. If you'd like more details about joining my VIP education community, reach out to me at julie@seattleinvestorsclub.com or text me at 206-910-2985 or just send me a Facebook message. My new favorite phrase is community equals confidence. So let's navigate the future of real estate together. Now, back to the show. Wow. So, what do we do though? Affordable housing, is such an issue right now and beyond. What do you predict? You think that Seattle is going to pass isn't it Oregon that has no single family housing zones or something like that, where they've rezoned everything that you can have multiples on every parcel? Is that something that happened in Oregon that could happen here?
Yeah, it's possible. And that's exactly what Portland did. Anything, and I believe it's within the city limits of Portland or Portland proper, for that matter. No more single family zoning, and then we may end up getting down to that point. You will have some of these well-established communities within Seattle that will probably fight that pretty wildly, because if you look at Wallingford or Green Lake, it's really not a program that the residents want to see for the most part.
Right. So it'll take a while to fight it through maybe, but I don't know. It feels like something's going to happen. So, as far as, how about apartments? Let's go into apartments. Are we, and the potential for some sort of rent control or something like that? Is that, how are we looking on apartment construction? And, assuming that you follow that sort of stuff, and where do you see that headed? And what are the risks out there?
It's, again, the downtown core makes me nervous. There's a number of units that are still under construction. There's some 60,000 units in the pipeline that may or may not come out of the ground right now. I love apartments more in secondary submarkets or surrounding Seattle. I love townhomes in those secondary submarkets surrounding Seattle. I don't see the long-term affluent buyer living in downtown and for the short term. That may change more long-term. And there's no way, with the cost of land, mitigation fees, construction costs, material costs, that we're going to be able to ever build an affordable product for housing in downtown. It's going to be incredibly challenging. There's some good organizations out there that are doing some good work in that realm, but it costs way too much to develop and build these days.
Right.
So it makes me nervous. And I'll say, and again, the downtown core for apartments, because and I think we've talked about this for 2 years, because I know I have, and it's that time frame of millennials vacating downtown because they realize they can't raise their kids on Second and Bell. And that's happening.
Right.
We're already seeing that migration of millennials out of the core.
Where are they going?
They're coming out into suburbia. They're coming out into where they grew up, and they want a yard where they can let their kids go out and play. And you just can't do that in Seattle. And no matter how many
that in these backyard DADU things either. You know what I mean?
Yeah.
I don't know who's I'm interested to see who the buyer profile is that is going to buy there. Do you think that there's it feels like to me when we hit like June of 2018, where things started to move downward, that was, how big of an impact was just plain simply buyer sentiment? Like, I'm tired of this shit. I don't want to compete like this. I'm tired of competing. I'm going to sit on the sidelines for a while, even though I have the money. I feel like I'm overpaying, and I'm depressed the day that I have to buy something because I feel like I'm overpaying for it and the price is getting driven up on me. And the reality is I don't know if that can go away, right? I mean, it feels like in 2018 that the buyer sentiment led to the hard stop. It felt like a hard stop to me at that time. How do you feel like, do you think that anything will happen here? Right now we're kicking off the year. I just sold a new construction in West Seattle, a single family new construction for, over 1.1 million. It sold for 10% over the list price, waiving everything. I probably could have got them to waive their financing. They removed all their contingencies, released a huge earnest money. And if I would have pushed them one push harder, I could have got them, like I said, to remove even their financing contingency. How do you think competition is going to affect buyer sentiment? That's a hard question, but.
Yeah. So if we go back and look at 2018, there were 4 or 5 issues that all collided within that same month. One, we had consumer sentiment, like you said, there was buyer fatigue. Everybody was pissed off, tired of throwing bids out there for a house and getting turned down or outbid. And so we started to see those buyers vacate the market. Amazon hiring also started to slow down right at about that point because they were shuffling around people within departments. It was just a pause within hiring. So our in-migration slowed slightly. We also had our rate of job growth drop down to, I believe it was around 1.7% when we had been hovering at around 3%. Right now, we're back up to 4%. We peaked last month at 4.8% annualized rate of job growth. We also had interest rates that bumped up above 4%, close to 5%, 3 months into 2018, and they hovered there until basically around June or July, if I remember correctly. Could be
so a little bit of news a little bit of poking going on from news from all fronts, giving people a little pause, little anxiety maybe, coupled with the fact
2008, and when there was a gentleman working for the Seattle Times at the time. He's no longer there, but he writes an article. And frankly, when he called me the first time, he says, just, I'm not a real estate guy. I really don't know much about real estate. Can I call you if I ever have questions? Absolutely, I said. And the guy never called me. And yet he's writing articles about the crash of the housing market. Seattle could see the largest drop in history or ever or decades. And it was just absolutely absurd because they didn't look at all the fundamentals. So articles like that start coming.
But we started off that year. We started off that year with some good sales. I mean, the first quarter didn't feel too different. I'm just talking about how I feel on the ground, right? Being a real estate broker here. And it didn't feel, it felt like maybe there was some anxiety in the air, but felt like things were clicking along still. Where are we as a comparison? Like we said, there was all these different little things happening, a little slowdown of hiring, little slowdown of job growth, little news bullshit coming out. Now, we're sitting about the same time, here in 2020. Do we feel like we're off to a good start? I know we're off to a good start. Do we feel like there's anything out there causing anxiety that could cause us to have another stop here, a hard stop or a pause the second half of 2020? Or did people feel like, we made it through that and nothing happened? So, I think we're just stuck with this competitive market and they're just going to live with it and, just going to buy if they buy.
Yeah. So first off, let me state that feelings aren't real. So if you feel like something is happening, go do some research, because if you make decisions on how you just feel without the data behind it, you're going to make a mistake ultimately. With that said, there are some issues that are occurring out there in the marketplace that, yes, could cause a slowdown. Are there issues out there that could cause an event like 2008? Very small chance, but yes, there are. When it comes to our local market here, and if I were just to look at the fundamentals here locally, the reality is we're still bringing in, on average, 10,000 people per month into the Central Puget Sound. They need housing. We are seeing substantial job growth. And again, like I said, that rate of job growth has reached upwards of 4%, 4.8 last month. when you see that kind of job growth, again, people need to find housing, and we still have a shortage. We've got a 1-month supply in each individual county. So let's talk about what happens when you have inventory levels that hit this kind of rate, and we've got job growth that hits where we're at, all these things. So we're going to have bidding wars. They've already started. They're going to continue on for the next 3 to 6 months. And we're going to hit a ceiling potentially. Here's the key word, potentially. If we start to see double-digit appreciation again, it's going to be cut off. We're going to hit a hard ceiling, and people will stop buying, and we'll start to see that inventory rise up again. If we don't see that and we start to see 3 to 5, maybe even a 7% appreciation over the next year, we're fine. The market can handle a 5% appreciation rate over the next 12, 24 months, annualized. Again, you hit that double digit, that's going to freak people out. And people aren't, they're not going to be able to afford the housing again. So we have a hard ceiling in regards to pricing, and that hard ceiling varies within each individual submarket where you're at. Let's talk about one of the key indicators on that. So when we look at interest rates, I've seen a lot of forecasts that say, hey, interest rates are going to stay low for the next 1 to 2 years. Yes, there's a very large potential of that. So you have to understand why mortgage rates stay low, and that is the 10-year pressure being put on the 10-year treasuries. There's been a tremendous amount of investment into that 10-year treasury because it's a safe investment, and we had global monies flying in over the last year. That pushes the 10-year treasury downward. Here's what nobody's talking about yet, and that might cause interest rates to rise. The Federal Reserve is going to introduce a 20-year treasury note for the first time in, I believe, 35 years. That could relieve the pressure on the 10-year treasury. And if that's the case, then you're going to start to see that 10-year treasury yield rise. With it follows mortgage rates to rise. Now, I don't believe that they're going to hit 6%, but I would not be shocked if interest rates 8 months from now are back up near 4.5 to 5. That will, again, slow the market down.
Right. All good stuff. I hope you guys are listening. So if you were a builder today then, and we appreciate all your insight on this, and like you said, guys, you should be, we don't do enough of this data updating for you. So make sure that you find your place or that you understand how to research data. Or do you have any recommendations on where people, I know, as real estate brokers, you can, figure out where to get data, but for the average person, the average investor or person listening, is there any good resources where they can check? Do you have anything that you put out, Todd? I mean, that people can access good data. Any tips for them?
At this point, I do not. I will say this, that at Level, these guys have given me the funding to go build an internal data resource that will allow me to start working on some infill evaluation of products. So that's going to be part of the service that we provide as we move forward. So a builder brings us a piece of dirt that he's going to buy. The product that I'm designing will be a push button. And if there's somebody who borrows from us, I'll be able to give them a quick analysis on that project and say, hey, this is a good piece of dirt, or no, I wouldn't go here. Look at the inventory, look at the trending analysis. So that's the cool part.
There you go. There you go, guys. I hope you heard that. You get a little double check on your deal by working with Todd as well.
Yeah. So we took, here's an example. We had a project that came across my desk, and I did a quick analysis on it, and I went up to the president of the company and I said, here's the deal with this, and here's what I need from you. I said, this project here, we'll make a killing on. We will make money. The builder will go bankrupt. And we need to share this with the builder. And the owner concurred and said, I agree. Send that report off to the developer and the builder so he knows exactly what he's getting into. And we did that. Now the builder decided to move on with the product. which is fine. I've warned him. We gave him all the relevant information, but that may end up causing him to reduce his construction costs in certain manners. It may cause him to rethink his sales and marketing program, whatever that may be. But having all that information ahead of time, potentially could save him a ton of money.
Exactly. Wonderful. Love to hear that. Anything else you want to share with us today about if you were a builder right now, if you're going to go build your own products, where would you be looking, Todd? Where would you be looking for dirt or opportunities?
Again, there underlies an issue. So there's opportunities across the board everywhere, but there's also danger zones everywhere right now. And you just really have to understand your neighborhood and your market. And if your neighborhood is starting to run into a high risk area, and there's a number of them for me out there, I'd really have to rethink where I'm going. I like the east side because we look at the amount of job growth that's coming on anywhere from Renton to, say, South Everett. On the east side, staying east of I-5, I like Shoreline. I still like Wallingford. But you have to be so careful in where you buy dirt. Because if you start pulling comps, we are starting to see price appreciation slightly in those areas, say north of Seattle. But I've still got so much inventory coming through the pipeline where builders and developers paid top dollar for the dirt, say in April of 2018.
Right.
And there's still upwards of a 3-year supply of townhomes that are either coming on the market, under construction, or moving dirt. 3 years worth. That's a lot.
That is a lot.
So you just have to be really cautious in today's day and age. The one thing I didn't talk about, let me just touch base on kind of the looming things out there. Pay attention to this virus, this coronavirus, because it's just perception alone could slow the market if this does become, quote unquote, a pandemic here in the U.S. I think China's probably underreporting the severity of the number of deaths that have occurred. Because we've never gotten any honesty outside of China. I am watching the bond market. I'm seeing corporate debt defaults rise a little bit. We had Ford Motor Credit I believe is rated minus BBB now, or BBB minus, which is virtually junk. Heinz Corporation got downgraded to junk. I'm just starting to see some of those signs out there that I don't think the economy is going to crash, but there's enough behavior out there from a corporate standpoint that makes me a little bit nervous.
Right. I have a touch into the China consumer market related to some of my own business, and some of our friends over in China are actually saying that it's possible the coronavirus situation actually makes Chinese consumers even more so actually want to come and buy and get their money out and buy some real estate here in the U.S., even though it's been made harder for them to do so, that this scare has made them even more so, maybe not for themselves, but for their children or grandchildren, right? Yeah. For them, maybe it's too late, but they want their children or grandchildren to have an opportunity to get over here. And so it'll be interesting. I'm pretty close to that market myself on my own business dealings. So be interesting to check back in another year from now and see how that all trickles down. But
because I've heard a rumor, and again, hearsay, that they've already pulled together a vaccine. I just heard it this morning. Could be wrong. I haven't double checked it.
I've not heard that yet. That would be good.
Yeah. So throw in the hypothetical that, we do get a vaccine and we reduce the threat and we don't end up hitting into a pandemic here, nor the death tolls, and we're able to help China out in regards to that vaccine. I think you're absolutely right. I think there's a potential of a flood of Chinese money coming here.
Right. But what's interesting from my knowledge and perspective is that where they want a deal, and they actually like to buy in the Texas, Arizona, those markets there. There's, I think we have about 17 cities, including a few in Canada, that Chinese consumers are focused on buying in. And those are actually lower price points, in the $300,000 to $500,000 range, is where 80% of them want to buy, which is pretty interesting, right? Like I said, in places like Texas, and things like that. So I think there's that misconception that Chinese consumers want to come buy all these $1 million homes, when that's a very small percentage of the consumers. They prefer the more affordable priced homes in other states.
Yeah, we've seen that for the last couple of years, where the Chinese middle class is now starting to migrate out of the country, not just the wealthy of wealthies.
Right. Again, this is, I think, trying to buy for the future generations. So It'll be interesting to see how that goes. Well, all this is good stuff, guys. I mean, again, cautiously optimistic. You mix in how the real estate industry is disrupting and changing with technology. And, that adds another little layer on top. I think that's kind of interesting as people are becoming more educated about how they can buy and where they can buy and things like that as well. It'll be interesting to see how we move forward. Of course, we are lucky to be here in the Pacific Northwest and enjoy the fruits of all the job growth here for sure. So we'll check back in with you. We're going to wrap it up today so we can all get back to work. Anything that you want to add on top, Todd? Light rail, we didn't touch on light rail, which can only be positive, I assume. Yeah. Is that already baked in? Is all the light rail stuff already baked in? Because that's, people are buying now to be ready for when it's, fully functioning.
And I think what we're going to end up seeing is some additional upzoning surrounding those communities. Like say, again, Shoreline, for example, when you go up and you look at where the stations are coming in, and you'll have let's say a 4-block radius or 5-block radius that was upzoned. I think you're going to see that begin to expand, because right now you've got the residential that's beginning to go in, and then you're going to have additional new commercial space that will come in, and they're going to have to expand that upzone territory.
Right. One of my buddies, I'm actually going to tell him to call you, Todd. One of my buddies has I think it's about a 650 unit assembled, parcel for 650 units in Shoreline that he's put together, that he's raising money on right now. I'm going to tell him to call you and talk to you about that project, if that sounds good to you. He's been working hard on that. But, well, wow. Anything else we want to layer on top before we sign off today? All good stuff. It's interesting how it feels, like you said, don't go off feelings, right? Because it feels like things are really booming again. But, when you look at the data behind it all and what's out there and, the realities of like the data that you say, it's a cautiously optimistic outlook, right?
I will say this, because you had asked a question in regards to product on the single family side. So if I were building in an area where, say, again, North Seattle, downtown Seattle, I'm going to build a single family unit. If that's the route I'm going, that could easily be broken up. I'm going to do dual masters. I'm going to design it to where it can be segmented. The house can be segmented to be rented off in a portion. That will give consumers the option to come in and buy a more expensive house, knowing that they've got this income potential.
Exactly. Very, very good point. Actually, the house that I just sold as such had that exact same setup. You could literally just throw. They had the washer and dryer both upstairs and downstairs. And they had, where it could be, they had a kitchen area, we'll call it a wet bar, easily convertible to a kitchen area in the downstairs as well. purposefully for marketing it as the dual type of income. You could rent out the bottom. So if any of you guys are interested in seeing this beautiful product that I just sold, give me a shout out or hit me up at julie@seattleiinvestorsclub.com. One of my favorite builders, Weaver Construction, just built that in West Seattle. Beautiful product with that in mind. Exactly. Good point. I wonder if you'll see more of that. I mean, I guess the lot size has to be there for the, the detached dwelling unit, on that. We haven't seen a lot of appraisals yet on those detached units as well, right?
Yeah.
To know how those are going to be valued. So any insight on that, on that?
Yeah, it still remains to be seen because we're looking at $300 to $400 a square foot of construction costs, if not a little bit more, when you look at new trenching to get down towards the sewer and the access to the water. And then there's development issues that you can run into where the street water capacity, even though you may be zoned properly and you can put a ADU in the back of your property, the water system out at the road isn't conducive. There's just a ton of issues you could potentially run into. So before you go jumping in with both feet, again, got to do your research.
Do you know anybody that you would call to be the expert on that topic, on the DADU?
I don't, but I bet somebody listening would be able to provide a good engineer.
Yep. We do have some people that are in that game right now. We've had some successes actually happen, carving those out as, condos, like you said, and condominiumize the lot, but not enough of them for sure. So my concern more is people going and snatching up those, building 2 or 3 townhomes in the backyard of a single family. I just, and what's scary about that to me is that the builders, to my knowledge, I'm in Ballard and what's happening. So the sellers are saying, yeah, I'll take, $1 million for my backyard. I want $1 million. And they go, okay. The builder says, here's how you're going to get your $1 million. You're going to sell your front house for $650 or $700, and we'll pay you $300,000 or $400,000 for your backyard. That's how you're going to get your $1 million or 1.1 that you want. So these homeowners are being, seeing stars, and they're grabbing that $400,000 for their backyard or whatever the number is, and not realizing the impact of their ability then to sell their front home. I mean, I don't know, right? As opposed to maybe somebody who's going to, the builder who buys both the home and the lot in the backyard. I think it'll be interesting to see how that separation happens as well. I think there's going to be some trouble for some homeowners that didn't get their entire parcel purchased and only sold their backyard when they go to try and sell. So anyway.
Yeah, because I see some pretty ugly product out there.
I know. I think it's a race. I feel like it's a race right now to see who can go first, because everybody's anticipating that it could be a problem later. So they want to go first, so it'll be interesting. But, all right, guys. Well, again, if you are considering, or if you are a builder listening today, and you are looking for not only a great rates and terms for your project, but addition to having an expert set of eyes tell you whether maybe you should build it or not, sounds like you should call Todd at Level Capital. Joe's going to throw all the details down in the show notes today on how to reach Todd. We always appreciate you coming on and giving us the update and reminding us of things that we, that we don't think about, and also reminding us to rely on the data. Rely on the data, not on how you feel, was a very good point today. So other than that, Joe, how can everybody find today's show notes and info?
Yeah, everybody can get to the show notes by going to seattleinvestorsclub.com/104. That's seattleinvestorsclub.com/104. And if you like this show, make sure that you give us a review and hit subscribe wherever you are listening. We'd love it if you did that, and we will read your review on the podcast.
Awesome stuff, guys. I have a little bit of admin that I want to add on top here today. And I want to remind you guys all that the Pacific Northwest Big Badass Real Estate Expo is coming up this July. I'm trying to find the exact dates right now, but that is hosted by our friend Tarl Yarber. You definitely don't want to miss that event. We'll be there. We want to see you there. I'm trying to pull it up right now. Pacific Northwest Badass Expo. It's a good event. There's, I think, going to be like 1,000 people there this year. It's growing every year. Here it is, Pacific Northwest. The website is pnwrealestateexpo.com. Pacific Northwest Big Badass Real Estate Wealth Expo 2020. And let's check the date on that. It is, I believe, in July. I'm telling you guys right now. When is it? I'm looking for the date. It is July 10th through the 12th. And you guys should all jump on there, pnwrealestateexpo.com, and get your tickets now before they go up in price. It is the largest real estate event of the year here in the Pacific Northwest. It is no BS content. I think if you were there before, you know how impactful it can be and all the great info you're going to get there and all the spectacular networking that's going to happen there. There's over, 75 exhibitors, over 750 investors, over 40 speakers. It's insane. I'm looking at a picture of Brandon Turner right here on their website. So hope to see you there. Go get your tickets. If you need to learn more info about that, contact Tarl Yarber or Grace Yarber, or you can contact myself or Joe, and we'll hit you up. But don't wait to buy your tickets because they go up in price. And we look forward to seeing you guys there this summer, July 10th through the 12th. In addition to that, we'd love to see you at one of our local meetups. We have them weekly in the Seattle area, the Tacoma area, and on the east side in the Bellevue area. We have Tuesdays in Burien from 12 to 2 p.m. every single Tuesday at Angelo's at 601 Southwest 153rd Street in Burien. Come have some yummy Italian lunch and join the conversation. We have every Thursday at 9:30 a.m. in Milton for our Pierce County people at the Milton Lodge upstairs. Go there on Thursdays and go plug in. In addition, on Thursdays, every single Thursday at the Family Pancake House in Redmond off Redmond Way, we are there from 10 to 12 p.m. Such awesome conversations. No format, just open discussions. Bring all your questions. You got something you want to throw up against the wall? Come tell it to the group and let's see if we can all work through it together. It's fun. It's silly. There's some good eats, and we hope to see you there. Other than that, we again thank Todd for joining us today. We say, Joe, be safe in your travels and up in the mountains. And other than that, I'll say sayonara today and talk to you guys next time. All right. Thanks for listening. Over and out.
Thanks for listening to the Seattle Investors Club podcast. If you have questions that you'd like to have answered on the show, shoot us an email at info@seattleinvestorsclub.com. Now go out, take that action, and build that real estate business. Thanks for listening.